All right, hello everyone. Welcome back to another episode of the WaxFusion Show. I'm your host Mike D, and today I have Manas with me to talk about his lending and borrowing protocol. How you doing, Manas?
Hey guys, how are you doing?
Can't complain, man. I'm actually really excited to talk to you about this because I know I've seen you on a couple of streams discussing it already, but there were some questions that I had that weren't exactly asked, and I know there's a lot of complications and complex mechanics to it. So let's just dive right into it. I guess
Sure.
what is it exactly? What's the protocol?
Okay, so the protocol that I'm building, it's a pretty standard protocol. Almost you will see almost every like infra-based chain has, which is a lending and borrowing protocol, right? Lending, borrowing, and then derivatives on top. Lending, borrowing, how it works is you usually put in a very liquid asset as collateral, and you take out USDT or a stable coin as a loan, and then you pay interest on the collateral itself, right? So that's how it works. Usually, the interest rate varies, but it's more like 10 to 12%. So basically, what you're trying to do, you increase the purchasing power of that collateral because now you can do a lot of other things, and you can also leverage up, right, using that same borrowed funds. Uh, so that's what I'm building. But what's different about the protocol that we are building here is I want this protocol to be operational in a fully automated fashion where you don't really need the team who built it upfront to be available in the future, and then also that the protocol itself will have no revenue at all, right? So all of the actors can come in together, and then they can perform their own part and then take away their share of the revenue from it. That's how it works. I can go deeper if that's what you would want to go first.
Yeah, we'll get into specifics as we go through the conversation. When you talk about derivatives, are those completely separated from the lending side of things, like another feature, or is that something
Yeah,
that?
yeah. These are two different protocols. So lending is one different protocol, and derivatives is another different protocol, both independent of each other. Yeah.
Okay, great. So we'll focus mainly on the lending for now, if that's cool.
Yeah.
You mentioned variable interest rates, so I'm assuming that would be based on the usage of like how much of an asset is borrowed at a given time will make the interest go up because it has more demand.
Yeah, it will have a simple demand supply demand formula plus some base levels which will be more like configured based on whatever the current interest rate across different DeFi platforms is on different chains, right? So one base rate which will be configurable from outside by different teams or like different players involved, and then a variable interest rate on top which is more like simple supply demand constraint.
Okay, great. You mentioned there's not going to be any revenue for the protocol. So does that mean you as a developer are not taking any revenue or nothing at all is going to the protocol itself?
So I, as a developer, am not taking any revenue. So how it works is once so like the path I'm taking is I'm getting it funded through like Wax Labs. So all the development efforts I put in, I want to get it funded through Wax Labs. But once the protocol is live, it will be very self-sustainable in the sense that uh, in itself, like the contract will not keep any revenue, right? But just like atomic assets, atomic assets and atomic market, different actors can come in, register themselves, and get their share of revenues. For example, if you look at what are the different parties that are involved, so one of the party is the liquidity providers, right, who provide us USDT for lending. So these actors, or like these can be as simple as a general Wax user, or it can be a dedicated project. They can come in, they can add liquidity to the protocol, and then maybe they get 60-70% share of all the revenue that's generated. Then market makers can like UI layers can come in. For example, Alcor can come in, Vaxonage can come in, and Taco can come in. They can register themselves as the demand builders, right? Because just even if you have liquidity, let's say there is $50,000 deposited, right? That doesn't solve the problem because you have demand side problem and supply side. That's just supply side. So demand side, atomic market, Alcor, and even WaxFusion, they can register themselves as the like market makers, and then they can get the demand, like they can build a UI component, they can have users land from their platform, and then they take away 20-30% or 40%, which is entirely configurable of the revenue from the protocol, right? And then you also, since it's entirely decentralized, you don't want a service, like service run by developers, which is us, which triggers liquidations based on price targets, like, because someone has to constantly monitor when a liquidation level is reached and then call a blockchain transaction, right? So in order to decentralize that, anybody can register as a liquidation agent. There will be a simple scoring of how what accuracy they have, and then based on how what's their accuracy of triggering liquidations, they can also take away up to 1% of the revenue from the protocol. So all the different actors that are required to run the protocol fully decentralized, everyone, like anyone involved from Vex chain, can register themselves as that particular actor and then take away that part of the revenue from the protocol. But in itself, net protocol will not keep anything. To make the protocol self-sustaining, because you, like, a product is never finished, right? It's an ongoing product, so you will always have some changes, some patch fixes that are needed for the protocol. So what protocol does is 7%, I'm like, in my original thesis, 7% I plan to redirect it to maybe VaxLab or a dedicated wallet, which is maybe multi-sig controlled by Vax team, which funds future developments within the protocol. And then anybody can come in on GitHub, submit a proposal, and get a proposal approved, and then plug in the development into the protocol. So, like, once the protocol is out there, you guys won't need me, as in, to run the protocol or manage or improve it. There will be enough incentives for the protocol, provided we are able to build demand and supply initial, like, kickstarted initially. There will be enough like ecosystem built in around it, so that the protocol is self-sustaining and keeps on moving. That's the plan.
Excellent. Yeah, because it's definitely important that it can be upgraded in the future if it needs to be.
Yeah.
When you talk about liquidations, do you have something in mind as far as the thresholds? So, what will be the max borrowable amount that someone could borrow against their collateral, and what will be the liquidation threshold?
Yeah. So, like, a good example is, like, obviously this is like, this starts getting into a bit technical, but so it will vary from token to token. Not every token will have same borrow levels and same liquidation levels, but like, if you look at an average, like if I go to BitGet or OKX or these exchanges, or like normal exchange, generally you get about 75 to 80% of the LTV, right? So let's say I come to the protocol with $1 of wax, I'm able to get $0.8 USDT, right? So that's generally how much you are able to borrow, and then liquidation is reached when like your LTV reaches 96%. For example, the $1 you initially put in, if that reduces down to, let's say, $0.83 or $0.82, that's when the liquidation gets triggered, which is 90 to 93% LTV, sometimes 95, based on what's the liquidity of the token, and then how risky is the asset, right? Uh, will have a very clear structure defined over it, but that's usually it. Like, you have to have a margin of error, and that margin of error is based on you know what is the volume that token can sustain. So let's say if it's $1,000 borrow, if I go to Algor and sell that $1,000 directly into the market, what's the percentage slippage I'm having, what's the price impact I'm having. Based on that, the liquidation levels will be set for.
Yeah, this is one of the main issues that we have on Wax too, because for a protocol like this to run properly and be able to sustain a large amount of TVL, you need to have deep liquidity on the pairs,
Yeah.
which kind of brings me into my next point or question here. When you talk about liquidations, there's two factors there that we need to think about. One of them is where you're getting the price from.
Yeah.
Actually, I guess there's more than two factors, but where you're getting the price from. Um, when the third party liquidates someone, are they repaying the person's loan, like the initial amount that they borrowed, plus
Uh,
the interest?
yeah, yeah. So how it works generally in other protocols, I will answer the second question first, because that requires a, like, deep thought. So there is something called insurance funds, which most of these exchanges have built in, right? Whether it's a decentralized exchange or a centralized exchange, they have insurance fund. So the like liquidation levels. So when you liquidate, right, they don't liquidate at the current price. So like let's say you triggered a liquidation order, your order got executed at let's say 0.024 wax, right? You the user will not get back from the liquidation level, but rather 0. Maybe 0.022x. So the 0.04, is kept into the insurance fund, so that tomorrow if we liquidate something else and we are not able to even make back, let's say, the original amount from liquidation, the insurance fund auto covers it. So fund is also part of the proposal, and then there are various inflows into the insurance fund through different transactions, right? Which I detail out in my proposal. So insurance fund will be the coverage, and then any change you have, because during liquidation user doesn't get anything back, right? So if I have something lent out from a platform and I get liquidated, I don't get anything back, even if the selling price was actually higher than the liquidation price. So any decentralized exchange or centralized exchange keeps the change, and then they put it into the insurance fund. So that is how any price differences are covered. And then uh, it's always the priority order. The first priority is pay back the principal, which is cover the protocol's initial funds. If they are paid back, let's say you are not able to pay back, then take out the delta amount from the insurance fund. But if you are able to pay them back, then pay out as much as interest as you can, and then even after that, if there is something left, then put it back to the insurance fund. That's how the flow goes. So principal first, and then interest second, and then whatever is left, it goes to the insurance fund. That's how the liquidation is going to happen. Where are you getting the price from? Like liquidations primarily, there will be a price monitor on external sources also, but we'll use a min of what the current Alcor price is, because it's possible to get the Alcor price within the smart contract. And then what's the average market price? Because there may be a case where market price moved, like quickly, and then external oracle tells us, hey, wax price is actually dropped, but Alcor hasn't reflected it yet. But it will probably reflect, let's say, in a 30-40 second window, or 20-30 second window, like whichever it may. So there will be multiple price points, one coming from alcohol, and then other oracles, and we'll use min of that, uh, you know with at least like 2-3 data points. We'll use min of that and then trigger liquidations based on that. That's how I'm thinking. But obviously, we'll see once we see it in action, where the change is needed. But this is something which is entirely configurable in the future.
Excellent. Thanks for the explanation. Let's take a step back for a second. Actually,
Yeah.
I'd like to ask you why this is needed on Wax.
uh, So one is, you need, so let's say you have liquid staking token, right? So like if you just ask me whether there is a demand or appetite for it, there's definitely demand and appetite for DeFi products, right? If you look at liquid stake token wax, it unlocks your capital, right? Because you are able to stake your wax and use it at the same time. So you have that one perk, but add-on baggage that any liquid staker has to take is they have to build a whole different market for it, right? So you can't do that without building the market, and then you can't leverage on it. So if let's say I take on LS wax, I sell that LS wax and get the wax, and then turn it into LS wax again. I can't, like, on every cycle I'm gonna lose 0.05%, which is the redemption fee, or at least the Alcor slippage, right? So the more iterations I go into the system, I actually lose a percentage fee, but I don't end up leveraging on the token itself, right? Uh, for example, let's say you start with 100 wax, you put in that 100 wax into the LS wax, you got 100 wax worth of LS wax, and then you swap it for wax again. And every swap, you're going to lose some fees, correct?
Yeah.
But if you do that same with a lending protocol, you can actually leverage up where, let's say you deposited wax and got zero point 0.8 US dollars, right? Now you can go into the market, take buy more wax with that 0.8 US dollars, and then deposit it again. Now you have, one wax and plus $0.8 worth of wax, and then the wax you got it, you can again go into the market, buy more wax, deposit it again, and essentially all you are paying is the interest rates, right? So you are able to leverage up your position multiple layers up, and you are only liable for the interest rate, which is 6 8%, 10%, whatever that is, right? And then this, like this I'm explaining technical, but why this is very important is, like, if you are able to leverage up your position. So if I have $100 on wax chain at this moment, I can only use the value of that $100, nothing else, right? But if I go to any centralized exchange today, you know I can use that 100 wax, I can buy a derivative product, I can lend, and then I can basically leverage up my risks and rewards, which is not possible to do on wax. And that is the primary driver of volume on any centralized exchange and even dex products, right? So in essentially you are unlocking that trading volume which is not there, like which traders crave. Like if we have to build a successful DeFi ecosystem, we have to build something which where traders have a scope for more dollar value extraction, right? They wanna, like, if they have $100, they wanna extract maximum value from it, and they can only do that when they can leverage up with the same $100. So that's one. And then second, right now all the USDT that is sitting around in our chain, like $200,000 worth of wax, worth of USDT, that's all unproductive. Like, the only way you can earn any revenue from it is two ways: either you lock into LP, and there is no stable LP, right? So you risk impermanent loss, or you take it out of the system and then maybe stake it on Binance or any centralized exchange and earn 8% interest. But either way, it's a lose-lose case, because you don't want to risk impermanent loss, so most users are not going to go for it. Or in other case where the user wins, where he takes out USDT into another chain, or let's say centralized exchange, and stakes it for 8% interest, then Wax is losing because the money is going out of the system. Imagine Funko, right? Let's say they made $100,000 on the draw, and now Wax is too of a variable asset, so they probably won't keep $100,000 worth of Wax into their accounts. They would want to convert at least a part of it into a stable coin, right? Let's say they do that on Wax, they will eventually realize in 1 month or 2 months or maybe even sooner that, hey, like, we have that $20,000 or $30,000 or $1 million USDT lying around, but we can earn interest on it, 8%. Why would we keep on Wax? So you are essentially stopping the value flow out, because your asset like USDT is unproductive at this stage. The minute we have lending protocol, you have now productive asset, because you can lend the same USDT, into our protocol. Obviously, we have to build the demand side of it also, but supply side, you give them an option, you know.
So to sum it up, there's basically nothing to do with your money on Wax right now, and because of that, anybody who gets any money on here is leaving, and new people aren't coming because there's nothing to do here. So the only thing that we have at this point is outflows. So we need more things for people to do with their money in order for new people to come and for the existing people to stay. Plus,
Yeah.
the mechanic that you were talking about just now, when he was referring to uh, lending an asset and then borrowing against it and then redepositing that same asset again. That's called looping. And basically, you're putting the same capital to use over and over again, which is
Yeah.
pretty much the same way that LS Wax works. You have wax, but you can't do anything with it. If you have one wax, there's only one wax of value sitting on the chain. But when you
Yeah.
have LS Wax, there's now two wax of value because you basically doubled
No,
the capital
but
yourself.
that's a limited leverage, right? You can't loop it again and again on it.
Yeah,
Every time you do more loops, you lose the value every
yeah.
time, but you don't gain it into that.
But here's the thing. This is why I've said after we built WaxFusion, the next thing that I want to see is a lending protocol, because I
Yeah.
don't know which tokens you're planning on starting with, but just for example, if a token like LS Wax was on there, it's already been doubled in value. It's
Yeah,
already doubled the
it's so
available
awesome,
liquidity.
right? Because you already have built a liquidity for it. Users are earning about, let's say, 20% APR, and then they are getting a loan at 10% APR. It's like, it's amazing.
It
You
pays
know,
itself off. And
Yeah,
if you really wanted, there could be even like, let's say, an isolated market where somebody could lend LS wax and borrow wax against it. It's pretty much risk free. It's obviously not risk free, but it's about as risk free as it can get because the interest
yeah,
that you would earn on the LS wax is going to pay off the wax loan, and then
yeah, exactly.
yeah, you're pretty much making even more money. Um, I was even thinking the other day, like it would be so awesome. Uh, when like our CPU rental funds were low on WaxFusion and I wanted to have more wax in there, I took some of my personal wax and I got LS wax with it so that there was more funds available for CPU. And then
Yeah,
I had a LS wax sitting in my wallet, and then the CPU funds ran out again. I was like, man, it would be so cool if I
yeah.
could
Actually,
lend
yeah.
out this LS wax right now to get more wax to deposit.
Yeah, so all you have to do is you have to make sure your delta is larger than whatever you're paying to the protocol, right? And then you can basically scale it up and then maximize and build a system around it. So I think we definitely need something like that on Wax. All the good protocols I know, like blockchains, they have the system, and then it's not like it's something of a proof of concept. They are actually profitable protocols on every chain. So I definitely feel that there is appetite for it, like considering all the recent incidents have happened, and then it's something. Yes, please let me DJ Nuzarax. And it's something that with proven concept, profitable product, and then everyone wants it. Like there are many occasions myself where I wanted to leverage up on my wax, and I had to go to a centralized exchange because that's the only place I can leverage up, right? Even in terms of lending. So and then there were occasions where I had a lot of USDT, and then what I did was I sell it off a wax, took it to an exchange, and then took it back as USDT and to earn interest on it. So like even if I look at myself, there were many occasions where I extracted value out of the wax ecosystem because there were less opportunities for me compared to outside.
Yeah, absolutely. Yeah, I'll go ahead and let you answer that if you want.
Uh, I don't know at this moment. When I submitted my initial proposal, there was definitely interest with the OIG team. I was given a feedback to add some more details to it, which I added, and then right now we are having discussions within the governance meetings. But like it would be very eager of me to say like what's the interest. I think there is an interest, but I don't know for sure. We'll only know that after a couple rounds of discussion and how the proposal goes through on Waxlab.
So, yeah, you actually submitted that initial proposal quite a while ago, I think, right? Or at least a few months. So, what's been the reason for the continued discussions as far as like reiterating it? I guess was there something they didn't like about it, or
Earlier it was more to do with like I got two items of feedback. One was using the same oracle, which was a bit tricky for me because right, like to start with it's a good, like we already have that oracle to start with, it's good, but it will become tricky as we have a lot of high volume through the protocol because we need on demand prices, right, and we need sub-second prices. uh, but I figured for the MVP, if we have Alcor pricing and then like another two three other price points, I think it would be good enough to start a protocol. But later, definitely, Oracle is something which needs a relook, and when obviously it's a profitable asset. That's yeah.
so this is one of the reasons why I constantly say that we need open source exchanges on Wax, because what Manas is trying to say right now is you can't depend on solely what the price of a token is, because let's say that there's $1 million worth of wax in his lending protocol and you're calculating liquidation thresholds, and someone, let's say, has 94% of their value borrowed against so far, and if it gets to 96%, they're going to be liquidated. And let's say like the entire $1 million in the protocol is at that 94% at one time. If one person withdraws a little bit of the $1 million and then sells it onto the market based on that price, all of a sudden everybody's going to be at 96%. And then if another person sells something, now the protocol is actually insolvent and you owe people money. So you can't depend solely on the price. We need deep liquidity on the network in order for protocols like this to even be able to work properly. So how are you going to go about that? I'm guessing you're going to have some sort of caps on how much can be locked in the protocol based on liquidity.
Yeah, so not caps on how much is deposited into a protocol, but caps on how much can be borrowed in total at a time, right, by all the users, and then how much can be borrowed per user, like these caps, and these caps will not just be based on the risk appetite of the user, like but also on what's available. So let's say we go with Alcor as a de facto market for liquidation or Wax on Hatch, right? Wherever we go, we'll like when we onboard a token, that's where we'll configure everything from, and then that is something uh, which will change like as the risk or liquidity of the token changes, right? So there will be a sufficient. So let's say we assume Wax can like liquidating Wax, we can easily liquidate $10,000 worth of Wax. So the levels will be so stringent that you can only borrow at max across all people $3,000, right? And then once this protocol is done, I like that's another problem to solve, but like I don't think the protocol itself should be solving that problem. That is something to be solved by the demand makers, right? Like for example Alcor, or let's say I come up with my own product later, which solves particularly this side of problem, where which builds liquidity or increases the liquidity of a token. So that's a separate problem to solve. But from a contract perspective or lending protocol perspective, the limits will be configured really well so that these cases are minimized. And then even if let's say these cases are like possible, we will have an insurance contract which covers this. So for example, how the lending protocol is like onboarded is anybody can onboard their own stable coin. So it's not dependent on USDT, right? So anybody can onboard their own stable coin, but the conditions are there is a fixed fee, all of which is paid in Wax, which goes directly into the insurance contract. And there is a staking, like they have to also stake up the tokens, right? Which takes care of any mal action that the contract itself. And obviously, it will be vetted also. They can't just self onboard it needs to be approved by, let's say, a multi-sig contract by Vex, OIG team, and other teams. That's how we are planning. But they have to stake and pay the fees at the same time to onboard that stablecoin for lending. And similarly, other projects can come in and then they can fulfill the other side. They can onboard other tokens which are available for deposit or collateral, right? But they have to also pay a fixed fee, all of which goes into a contract, insurance contract, and then they have to also stake some tokens. So like having these guardrails, it becomes a very good system where you always have a backup plan for anything. And then the goal will be in the initial launch to grow the insurance fund slowly, so that we have enough, like if the insurance fund grows over time, our borrowing limits can also be relaxed, because we know that in case that happens, we have the ability to cover it. And then slowly both of these can bootstrap together and grow the ecosystem. And then obviously demand side people can come in, and then they can pitch in, build better products, build liquidity in the market, and then take away other things.
What tokens are you planning on starting with, and are the markets going to be isolated?
uh, Markets, so yeah, yes, markets are going to be isolated in the sense that a user cannot like submit multiple collaterals for the same loan. So every like if it's a Wax loan, you can only submit Wax as a collateral and take away USDT, and then you can only play with more collateral increase decrease of the same Wax. uh, that's one. But we are planning to start with Wax and Woof. These are the two most liquid tokens on Wax. I also wanted to include LS Wax, but like that's a part I've left a little bit for later to figure out how do we onboard it. Uh, but starting with these projects, we test out the demand, we see how everything is working, and then slowly we'll have a well-defined doc on GitHub, open source GitHub protocol, where anybody can come in and then pitch in the projects for onboarding. If the request gets approved, they will follow the due diligence process, and then pay the fees, take it, and then get onboarded. So once everything works smoothly, we'll open it up through GitHub proposals for any token to come in and onboard, as long as they meet certain conditions.
Great. Yeah, I think that makes sense. Wolf and Wax, because they're both available on some centralized exchanges too, and the liquidity's deeper than anything else at the moment. Um, you mentioned something about open source, and I believe I saw something in your proposal about audit by guilds. Do you have anything planned for that so far, or is it you're just kind of going to reach out to some people when it's done and see if you can get them to look at it?
Uh, yeah, I mean, like one, like based off what all I gathered in like government's chats, I haven't reached out specifically guilds yet, but I figured that guilds will be open to it, auditing it. I didn't consider it fair to get it reviewed right up front by external parties because one, it's expensive. So I don't want a protocol which is in MPC stage to pay that 10,000, 15,000, $20,000 worth of fees just to get audited and then later realize that hey, isn't even a demand. I would feel a better utilization would be build a protocol, configure limits really well, and once supply side is proven, we can go back to the Vex team and then maybe create another proposal for getting it audited specifically. That would be a better approach, and then it's also more dollar saving for them. Let's say they want this protocol live, right? I wouldn't want them to spend $10,000 upfront and later realize, hey, it wasn't worth it because there is no real demand. So that's how I'm planning. So I think initial eyes through all the guilds. At least I want to involve at least 2 3 guilds, and then also I want to make sure that the contract ownership is not just with me, but it's a multi-sig with multiple important parties involved. Among the guilds, OIG and Wax team, we have to figure out some legal aspects around it, like whether, like if we build it decentralized enough, whether it's liable for legal action, and if yes, how. That's the question that I'm currently answering, researching over the weekend. But once it's done, I will like even include those details in the proposal.
Awesome. I'm more than happy to take a look at the contract too. I mean, I'm not like a master. I'm sure it's probably still worth having someone else look at it as well, but
Yeah.
uh, I'm sure I could probably spot a couple of things if there's anything obvious. Um, so if it turns out that the Wax team is not going to give you what you ask for, will you still build this, or are you just kind of gonna write it off at that point?
No, so if let's say I don't get funded by VaxLab, my backup plan is build the same protocol but in a more decentralized, more simplistic fashion. More centralized control. Build it out. Get proof of concept first. That there is enough demand, and then slowly decentralize it. So like the plan is so lending protocol in my plans originally with decentralized setup is about 5 6 months. That's all I will take from start to the end. But let's say it doesn't happen, I will quickly release in 2 months a decent product which gets the work done but isn't fully decentralized, and then slowly over time, like distribute and decentralize all the pieces of it. That's how I'm gonna plan it. So for example, look at lending protocol. So lending protocol will itself have its own revenue so that I can cover my fees, and then the insurance contract will not be a multi-sig but rather controlled by our team itself rather than Wax team. There will be other things involved. So I will release that product, but the timelines would change, and then the way I approach it will also change because I won't start with the decentralized product, but I will eventually go towards it.
Great, thanks for explaining. Man, I'm really excited for this. Like I've been saying for so long that we need lending on Wax. I feel like so many people are focused on things that don't really matter, and I just think this is one of the best things that we can do for the chain right now is to have a lending protocol. So yeah, I thought Alcor said that they were working on something at one point, but I don't know if that's going to happen anymore or how long it would take. But it's really difficult. There's so many things to solve. There's no liquidity here.
Yeah.
Like I feel like there needs to be more focus on, I don't know if incentivizing liquidity, or I just think if we had more wrapped Ethereum liquidity on Wax, more stablecoin liquidity, and even Bitcoin liquidity, there's so much more that could be done. Because like one thing that we've discussed in the past also was an over collateralized stablecoin, where you can issue a stable coin that's backed with what people deposit, like a lending protocol essentially, like MakerDAO. So like if someone, let's say someone deposited $100,000 worth of Wax, you might say we'll mint you a stable coin, but you can only get $20,000 of worth of it. Uh, and if that 20,000 gets to the point where it's worth as much as the wax, then you get as the deposit, then you get liquidated. But the problem there is wax is just too risky. It's too volatile. You can't build a collateralized stablecoin around wax. You want something like Ethereum, even Bitcoin to be backing that.
Yeah,
And we
I
have
am actually like my next plan after the lending protocol is like this is what I'm building inside WaxP tools is to build a stable coin on Wax which has the following feature, which is minted on Wax, but collateral can be managed anywhere. So you can be on Solana, let's say you deposit one USDT there on Solana, and then you mint one USDX on Wax, right? I think that's the way we bring bring the liquidity from all the chains to here. Like we allow all the users to deposit from any other chain they already have liquidity on, and then we mint it on Wax. That's how I want. And then over time, let's say over every weekly period or monthly period, uh, we have to obviously work with Wax team to see how we can bridge that. But every weekly we bridge that collateral on chain to us, and then users don't have to go through that friction. We do it for users. We maintain on chain, and then we bring the collateral down later.
yeah, that's ideal if the collateral deposit exists on another chain as well, because you don't want a wrapped version that's on wax because it's riskier that way. And so if there's ever any issues with the bridge, for example, that would just defeat the whole purpose of having the collateral in the first place.
Yeah.
So yeah, we were thinking about. I was thinking about bringing over some ETH from another chain and putting some liquidity on Wax just to kickstart it, but it seems like so much of a risk because I'm not only selling some of my ETH to buy whether it's Wax or stable or whatever it would be, but then I'm also pairing it against, let's say, Wax. So it's just like such a huge risk because
Yeah.
such a volatile asset, and it's not looking great right now.
Yeah. No, I think the right way to grow liquidity is not so see, like one is you need new money, right? Like it's one new money can be possibly that the Vex like they have their liquidity on each chain, right? They bring it over, which is already a point being discussed. That why not have that on Vex chain itself, you know? But we need new money, right? So new money, and then once the new money comes in, we need a way to lock it, right? All of the protocols we have built, like for example, the lending protocol that we built, the like LS Wax protocol that you have, WaxFusion, all of these protocols lock the liquidity, right? So provided there is new money come in, we have multiple now products available on Wax which can lock this liquidity, but we still need the new money, and I feel the new money comes in when you onboard a lot of users, and then all of these users spend like maybe half of a dollar each or a dollar each, right? That is all the new money comes in, and then once they spend this money, that money goes into the Vex ecosystem, and then we ramped up all the DeFi products so much that like at least 60-70% of it gets absorbed into our DeFi ecosystem. That's how I feel the whole chain should work. New money comes in, and then 60% gets absorbed, and then 40% maybe leaves or roams around the market, and then the 60% over time has enough churn volume to absorb like 30-40% of it permanently, because there is a lot of trading fees built in, and all the different protocols working together. For example, LSVAX, right? Over time it accumulates, and then let's say 20% users never plan to ever get withdraw that earning. So that's something locked permanently. I think that's how it works. That is why I'm also building Alpha World, where I'm trying to onboard a lot of users. So Telegram has that big user opportunity where like you can get to 1 million users really fast. I haven't solved that problem, but Woofy I think is trying to do the same thing. I'm not sure how the claims would work, but I think if their intent is to onboard these users eventually to Wax ecosystem, that's how they're gonna do. One, they're gonna get invested, like their products invested, like users are gonna use Woofy tap daily, and then for 3 months, 4 months, when once they have put in enough effort, they are gonna have a task which requires them to create a Wax wallet, and then maybe spend some Wax, right? Like, at least for me, that is the route to be taken. That's something I want to do. Like, once I have 50,000, 100,000 users, I want to build a system where they are able to pay using any other currency, but they have to finally get that value into, like, from the Wax ecosystem. So they can pay in any currency, they can pay in ton, or even like off ramp, on ramp it, or anything, but the value they get from that payment needs to be on Wax. That is how I'm planning to it. uh, we actually grew a lot last couple of weeks. We are at like 6,000 users already. Earlier, like, my problem was I wasn't getting users from outside of Wax because it was like too penetrative. But last week we broke that cycle, and now we have like 6,000 users. About 2-3 thousand are from, don't even know what is Wax. And then one learning I immediately had was, the moment I asked them to connect Wax wallet in the very initial days, they, like, the retention drops. So they need to be invested. So they need to play that game, or do some effort consistently for 2-3 months. Only at that point I can convert them. So that's how I'm heading. Uh, but I think onboarding as a problem would solve this for us. Like, if we are able to onboard users, we have enough locking mechanisms now to retain the, like, dollar value of liquidity which comes in. Unlike the last times, we didn't had any, right? Like, last time all the liquidity that came into the Wax, like, any the only thing we got was trading volume, right? There was nothing except the, like, basic DeFi pools to lock that value in. We didn't have liquid staking protocols, we didn't have lending, we didn't have avenues to make real profit sustainably over time. The only avenues for profit were the, inflationary games, which will eventually go away, and then, there will be no other thing to lock that Wax or lock the dollars in. So all these dollars in 2021, they eventually left the ecosystem because they didn't find avenues to lock it. Uh,
Yeah, people came here for our planet to make money and alien worlds to make money, and then when the Ponzonomics basically died and stopped being
and
sustainable,
then, yeah,
everybody
they
left.
saw there was nothing else on the X, right? Which gives them a sustainable value over time. And then they just left the ecosystem, right?
Yeah, exactly, and that's why I think we need to be more focused on stuff like what me and you are focusing on, because, like you said earlier, DeFi is pretty much the only sustainable
Yeah,
projects that you've seen in the space ever that have withstood the test of time. There's been nothing else that's stuck around. You can't make a Ponzi token and then just like still have it blowing up after 5 years go by. It doesn't work that way. And then you
yeah,
get people trying to recreate the same mechanics over and over again, but it just never catches the initial hype. We need
yeah,
stuff that genuinely locks value and contributes more value to the chain. Like lending, you mentioned there's going to be some that goes to insurance. I think you mentioned something about LS Wax. I don't know if that's still part of
yeah,
your plan,
yeah,
but
yeah. It's a part of the plan.
and also with WaxFusion with the protocol and liquidity, it's like temporary volume in this case or temporary TVL. It doesn't matter if the people leave after. Like it's not ideal if they leave after, but even if they do, they left something behind that's permanently stuck here now, never going anywhere, and it creates a residual benefit to the chain.
Yeah,
So we want to be driving as much volume through protocols like this as possible because in the end, it helps everybody.
yeah.
Yeah.
Agreed.
Um, anything else you want to add before we wrap up?
Uh, I mean, what, like, I don't know how many viewers are listening right now, but what do they think about the lending protocol? And what else in DeFi do you guys think we should have?
Oh, I forgot about this. Isn't there a risk that if we have new money plus loaning system, we would essentially create a lunatic? Yeah. So, like, if you're talking about the over collateralized stable idea that I was talking about, this
Hmm.
is why you don't want to have a volatile asset backing it. You don't want to issue,
Yeah,
like, at most, it really depends. But, like, let's say if you had ETH and Bitcoin backing a stable coin and you issued it based off that, if you only issued, let's say, 10 or 20% of the value of it in terms of the stable coin, like I think it's relatively safe to say that uh, Bitcoin and ETH both aren't going to drop 80% like very soon. And
yeah,
the thing about the protocols like that are designed properly is when the collateral goes down in value and somebody's deposit, it's just like a lending protocol. If their deposit becomes has a bad health factor, they can be liquidated, and that adds more collateral to the over collateralized stablecoin,
yeah,
ultimately fixing the problem. It's just people design things poorly, and that usually results in bad things happening. So
Yeah.
you have to think all these mechanics out very well.
Yeah,
But there's always
Luna actually was over collateralization, right? Like, but lending protocol never over collateralizes it. It's always under collateralized. So essentially, if the liquidation work really well, you always are in profit. Like there is no reason for protocol to be at loss unless there is a glitch in some, like, let's say, liquidations. Like liquidations is the primary risk for a lending protocol.
Yeah, absolutely. They need to happen in order for things to keep running smoothly, or else it'll become insolvent because the interest grows to the point where, or even the collateral would just
Yeah.
grow to the point where the whole protocol is insolvent, which is not good. But yeah, what else do you think we need on? Like, what do you think Wax's biggest problem is right now?
It's onboarding. Like, liquidity is there, right? But I think, like now with you and me, and then even, I think there is enough with, even with Woof, right? There is enough DeFi activity happening. Like, one interesting that Woofy did was, like, all these partners, like a lot of them got Woofy airdrop, right? And then most of these partners, what they did was they created a incentive system on Alcor, basically farms and stuff like that, which I think kickstarted our, like, DeFi ecosystem. And then now you have more revenues like LSVAX, LSW, and then lending protocol coming in. I think we need, what we are missing right now, to have a full fledged system is the user, and we need to figure out how to get these users. Like, there is another route, which is get better teams or developers or bigger band projects, but I think that's something we can't achieve as of now because it's a chicken and egg problem, right? These devs are going to demand where are the users I can cater to, and then we are not going to have them. And then these guys are going to demand, okay, where's the trading volume? We don't have them. But if we get the users first, and then we are somehow able to move a DeFi activity alongside with them, then we solve it. But I think, for me, users always come first because that's something we're missing.
I fully agree. I've been saying this forever, and nobody listens to me. But it seems like it was interesting, the conversation we had in the governance channel today. It actually seems like people are starting to come around and change their minds. Because I was saying this on so many roundtables for like a year, probably. Well, not a whole year, but a few of the roundtables. Like I kept trying
Yeah.
to say, we need users, and the way that you get users is the ability to make money. In my
Yeah.
opinion, I don't see what else is going to draw them here. The big brands and stuff, they aren't coming until there's somebody to sell stuff.
Yeah, exactly. It's the very last funnel, right?
Yeah.
Like, if, let's say, if there is enough activity and, like, dollar profits on Wax, the brands right now, all the big brands, they are not, like, committed to one chain. They are building multi-chain products, right? They want, they don't want one users, they want multiple users, they want all the users, right? So the only reason they may not come to a chain, if they feel is it's not worth the dollar value they spend on, right? So we definitely need users first. That's the only when we can go to them and convince them, hey, like, there is a case to be built for you guys, and there's a money to be made for you guys.
And I think the way that we get those users is not just by having opportunities on Wax, but we actually need to be getting out there somehow and finding ways to bring them here. So I think stuff like
Yeah,
your Telegram game that you're talking about is awesome. If you can
yeah,
manage to convert users to Wax users. I also want to get, I've been asking like a bunch of times. I haven't looked into it too much yet, but I really would love to get LS Wax bridged onto base because we have a yield bearing asset now that's actually like worth holding, but nobody outside of Wax knows that it exists. I mean, I'm sure the APRs aren't that attractive compared to what's out there, but still, if we could just put that out into the wild and like get other people to know about it. The cool thing about it is it doesn't matter which chain it's on. Like Woof, right? Woof leaves Wax through the bridge. The value leaves Wax. There's nothing here. It doesn't leave any value behind. It's lost value. LS Wax on base or on Solana or whatever chain, the underlying Wax that's backing it is on Wax, regardless of what chain the liquid token is on. So if we could get that out there, even if people were just trading it on base and didn't even come to Wax, it doesn't matter because
yeah.
all the value for the tokens they're holding is here. And if the price ever gets out of balance over on the other chain, we could simply send some more funds over there and just build liquidity deeper and deeper on the other chain,
Yeah,
which ultimately, yeah, and every time that happens, it just builds the protocol on liquidity more. It deepens liquidity on Wax. It creates more incentives. It's
yeah.
good for everybody.
Yeah, something that hasn't been tried, and then I don't know why that hasn't been tried is like nobody has tried like to form a protocol where, let's say, like in the token, like about 60 to 70% of the tokens are locked into the liquidity initially, right, by the protocol itself, and then you know the all the efforts go into building the trading volume, and then all the revenue that is earned, like all the trading fees that is earned from all the swaps, that goes back and feeds into buyback of the token, right? This is something nobody has tried. And then I feel like, let's say if you decide to bridge liquidity there, right, if you can write a simple contract which does that, collect fees and then buybacks and burns LS wax into a auto self-fulfilling loop, that's a like decent mechanism. So like the only challenge left with you guys will be how to get the volumes up, and then you can even have a deflationary funnel for the wax actually. uh,
Yeah, I mean, pretty much what you're talking about is protocol owned liquidity. So, in a
yeah,
sense, so yeah, I would love to see. I'm not going to take credit for protocol owned liquidity because obviously it's been out for like multiple years elsewhere
yeah,
before we did it. But I think we're probably the first ones to really do it on Wax. So I really hope that people see the value in it and start to follow suit and build
yeah,
other things that use their own protocol owned liquidity. It's such a great mechanic because it's a way that you're building permanent value for your project. It doesn't have
yeah,
to be a Ponzi anymore. There's like an actual value sink.
yeah, exactly.
And over time, all that does is make the floor on your project's TVL go higher, theoretically, depending on what the project is. But
Yeah,
um, Funko is probably the most successful project on Wax. I don't see why other companies don't copy their model. Well, I mean, if you mean Funko or you mean Drop, because if you mean Funko themselves, then I think other people don't have the massive business that Funko has, which is probably part of the reason. But if you mean like Drop, as far as the way they set up their market to have stuff where users don't really have to interact with Wax much, but the NFTs exist there, I think that's good. I don't even think the problem right now is the way that people are building things. I think it's just that we have like 5 people here and there's just no one else. Like there's so many obvious things that could add so much value to the chain, but nobody wants to do anything right now besides focus on, I don't know, like pointless stuff in my opinion. But it's tough. It's tough with the current guild pay.
yeah,
I think I was just saying earlier, man, I think it's such a good opportunity right now for a new guild, like somebody who doesn't know that they could be a block producer or doesn't know anything about it, for them to get started right now because they have a huge advantage. They have no costs, and if they have some idea for something that's not being done yet, they could simply like set up a node and have some income. I feel like as guilds right now, or even just people who are using Wax, we could be reaching out to people like that if we think there's any way that uh, we might be able to find value in something they're doing. Like,
yeah,
let's say some big influencer who has, I don't know, 1 million followers or something like that, and you know how to run a block producer node. You could pretty much reach out to that person and be like, "Man, there's like 6 figures a year for us to split. Create some content and tell all your 1 million people about Wax and do it every single 3 days for a year, and I'll split it with you." You could probably get to a decent standby rank with that,
yeah,
and maybe like one product or something. Um, there's, I just feel like there's not much ingenuity or innovation happening right now in the chain. A lot of people are burnt out, and it's, I don't know, it's tough. I'm even like upset with myself a little bit because like I know there's something out there that could be done, but like it just hasn't clicked for me yet. Of like what it is exactly. But
I think uh, yeah, like you're asking the right question. I think I have bothered myself, but like the only thing I've realized is that if if let's say like onboarding is one problem that obviously needs more eyes, but other ways as a product, I think the only way right now, like all the guilds or all the product builders can survive is if they chain out, right? They build multi-chain products and then find ways to retarget users from one chain to other. That's something probable. You talked about guild. Yes, that's definitely a scope, but with like every time the value of wax dropping, it doesn't build good enough trust at this moment. I think that is also a reason there is we don't see the guilds change very often. Like if I looked at the list 2 years back and now, probably I've seen only couple new people like you, right? But mostly overall guilds haven't changed a lot. Only some of the guilds have left, like couple, two, three, and some of the guilds have joined new. Uh, I think right now, like if projects are looking for sustainability, need definitely need to branch out and then find out ways to target those users. But like they need to have like activity outside. For example, like look at what Woofy did, right? So Woofy did an airdrop here and on Solana, right? Their maximum value accrued actually happened, like all the like dollar volume, all the price bumps, everything was actually related to Solana. Even if you look at like not today like Wolf's price looks more like manipulated, to be honest, like in the recent weeks. But I was looking at the charts of Solana and Wolf, right? And Wolf like exactly matched how Solana and Solana meme coins are moving, not Wax, right? So Wolf and Wax price correlation was way less than Wolf and Solana price correlation. That means that Solana, like Wolf built all its initial liquidity from Wolf user, like all Solana users, Wolf, and then they brought the liquidity to other ecosystems. So like the reason we had that all these liquidity and Wolf incentives, right? Like I can say that a lot, like a substantial part of them is being actually funded by the all these soul trading volume and then soul traders who bought the Wolf up to the levels that we are able to bridge value from Solana to here and then have farms here, right? So I think even if like let's say if somebody is looking at a new product launch, they should probably launch its product on Solana, on these chains, get value from there, and then they can maybe use some of it value and bring it to Wax if they care about Wax enough. But as a business model, they should definitely have multi-chain products. I think that is like in 2024 when we're sitting, that's something we definitely want as a sustainable business.
Shit, consumer break. I forgot again. I'm not. I'll do it next week. I promise. As far as what you were saying about Solana, yeah, it's the truth, and it also sucks to say it, but that's the case right now. I mean, and that's essentially right there encapsulates the whole problem that we're trying to talk about as far as
Yeah.
Wax goes. It's why aren't we getting new users? Because there's no money here. And as you just said, it's like if you want to launch a new project, don't do it on Wax if you want it to be successful. That's pretty much what you're saying, right? So even the Wax team realized this. That's why they're launching everything on Solana.
Yeah.
Um,
Like they don't even like look at Woofy Tap. You have no connection like anywhere to Wax Wallet. Like you even on the videos, right? They didn't even cover a single piece of content. If their intention is to bring users to Wax, they will probably do it at a very later stage, right? But like they also realize that it's not possible now. First, build a product, successful product, and then once you have a cemented product, and if you care about Wax enough, that's like when you like really bring those users in. But right now, like to start with, you don't have any chance if you launch a product on Wax. Like uh, the only profitable products I can see on Wax like today, like which are at least substantially profitable or like conservatively profitable, are all the dexes, which is Taco, Alcor, like these things, and all the NFT marketplaces. Not all, but at least all the top ones, right? These are like protocols. I see them making money consistently, but other than that, I don't see anything making money. Even renting service, we have a CP service. We do make profit, but it's like chunks. Like it's not. I can probably make that in a normal day-to-day job in a week. So everything else is a penny chunks, right? Like there is no real profit in anything on Wax.
yeah, there's just nothing to. Sorry. Sorry. Yeah, they're like, there's nothing to do here. There's nobody selling anything to. The people that are here, for the most part, expect everything for free. And I think part of the reason that is because there's no transaction fees here. This is a concept that's been brought up so many times over the past few years. Some
Mm-hmm.
people seem to disagree and some people agree, but when you have a chain that using it is 100% free, like absolutely free, except for maybe some temporary RAM costs. But even then, those aren't permanent fees. They can be redeemed later to get your money back. So using the chain drives absolutely no profit to the chain, with the exception of maybe like a small 0.5% fee for RAM buys and sells. Aside from that, all this massive daily activity that we can support, which is great, um, does not do anything to sustain the chain itself. All it does is bloat it more and more and make the costs go up,
Yeah.
and leave no value here in the long run. So, um, the point that I was trying to make is that when everything is free, it's kind of hard to have a floor on the price of anything, because creating the NFT costs nothing in the first place. Buying the NFT costs nothing in the first place. So now selling the NFT costs nothing. So you can sell it for 0.0001 wax and you still make something off of it. There's no incentive for there to be any market. So we just have to be a little more creative, I think, in terms of how we approach that. Even like the smallest fee would be so great. If you look at a chain like Base, I bring this up a lot, and people say like, "Oh, if the price went up, it would be too expensive to use the chain." We're known for being cheap, and cheap doesn't mean free. On Base, transactions are like a tenth of a penny most of the time, and they make millions and millions and millions and millions and millions of dollars, and they're not having the problems that we have right now. One
Yeah.
tenth of a penny is still basically free.
Yeah, people don't care about that. Like they are so used to blockchain by now, like all the old users, that they don't really care. And then you have sponsorship systems on Wax, right? So, like you have account abstraction, which is EIP 4337, where projects can actually sponsor a transaction, and then MetaMask also has a feature built in, right? Where not necessarily the one doing the transaction has to pay the transaction fee. Somebody else can pay it, and then you can pay it in multiple currencies, right? So like they have also built a lot of systems around where, like, let's say they're onboarding a new user, they don't even want to bother them with fee, but if it's an existing user, they're probably already accustomed to it and let them pay. uh, and then even like I think, like if you look at old users, if you see when Waze started, the transaction fee was actually 10 cents, 15, 20, 30 cents, 40 cents, right? And then I was looking at their updates, they actually scale down the fees over time as they get more and more demand. So like, from what I get from it was they wanted to have their enough trading volume and profit margins initially to keep the chain sustainable even at the very beginning, right? And as they grew their activity, they could sustain the same profit margins or like whatever, inflation is there, and then they can slowly reduce down the fees to them. Solana also has like, they don't even have a penny fee, like they have a half to half penny fee, right? Like maybe two zeros down, and then they are still like they still make even decent volume and like profitable in that sense, like if you don't take account of the inflation obviously. uh, so I think people have an appetite for far higher transaction fee, right? It's just that when we started, like, the amount of activity we showed that it is possible on Wax. Now, if we go back to, let's say, transaction fees, it will become unsustainable for all the projects that are already there. So, for example, let's say I was talking to a project who wants to airdrop like some meme coin token to 5,000 wallets, right? If we have even a penny dollar, like under $0.005 fee, for $5,000, that's a good chunk of money, like 200, $300 that a developer uses. So it creates a friction right now, right? Right now, because now people are already used to the system, right? So nobody wants to pay the fee, and the users don't want to pay the fee to like claim it, because they don't know whether they're gonna make it back or not.
Yeah, it's like almost a conversation that's not even worth having at this point because there's nothing
Yeah.
we can do about it. It's kind of the same thing that I talk about with the way that the private keys for accounts are set up on Wax. It seems so cool because of all the different permissions and stuff that you can do, but the problem with it, with needing a name attached to an account instead of a public key like most other chains, is that the account has to exist and be stored on chain before you can actually send anything to it. And on other chains, that's not the case because the public key exists, but it doesn't need to be stored on chain.
Yeah.
Once you send funds to that public key, then there's a record of a transaction. If we had something like that on Wax, it would solve so many of our RAM and our onboarding problems. Because if you had a public EVM key on Ethereum or Base or whatever, you can just send some, let's say, wrapped Wax if it existed on like Base or whatever. You could send it over to Wax, and it would just automatically be on your private key, your public key on the other chain. No sign up process, no complicated crap, no needing to figure out names and permissions and downloading Anchor or whatever. But there's like no point in having the conversation now because it's too late, right? So
Yeah.
um, I do know that Greymass, though. I know I'm going off on a bit of a tangent here. I know that Greymass is working on a MetaMask snap. I talked to Aaron earlier about it actually, and I think they're starting the audit on it next week. Once that's set up, people will be able to interact with the Wax blockchain through MetaMask. So if somebody is logged in onto their Ethereum or their Base wallet or whatever, they'll actually be able to also have Wax in the same MetaMask. But it's still a little bit complicated because it would be the same restrictions that you have with the Wax account now. So it doesn't fully solve the process, but what it does do is make it a lot easier for, let's say, a third party to come in and build a little tool where, like, I really wish they would do wrapped Wax on another chain besides ETH, like Base, because the fees are so much cheaper and it's more popular. But like if you had wrapped Wax on Base, somebody would be able to log in to their Base wallet on MetaMask, and then they'd be able to go to some UI that somebody like me or you builds, and it will say create a new wallet, fund your new wallet, and they could send, let's say, 100 wrapped Wax to their new wallet, which really they'd be sending to the bridge, but like on the back end on the DApp, it would take their Wax, create a new wallet for them, fund it, pay the fee out of whatever they sent. So out of their 100 Wax, they'd have maybe 98 left, and then they'd be able to just import the key into their MetaMask and just switch wallets, and they're automatically ready to transact on Wax. I
Yeah.
know the first iteration of the MetaMask snap itself is not going to fully solve the problem, but it's a huge step because it makes that possible now. It makes it possible to interact with the Wax blockchain through the same wallet you're already using if you're on another chain, and not need to learn about all the crap with like Wax Cloud wallet and but I think the missing issue there, the missing factor is also having wrapped Wax on another chain, because you wouldn't be able to fund your new wallet without it.
Yeah.
I don't know, but yeah, onboarding is a problem. This is my point.
Yeah. There are other ways to solve it, like a centralized approach where like the initial wallet is actually centralized, right? And then but users have option to claim it. I think that that goes into a way better user experience because we have the abilities to link and unlink keys on Wax, right? So initially a user can have centralized wallet, which almost everything is paid in fees as a transaction fee, like we charge the user on that, and then later down the line, when once he's pro on Wax, he knows how to use it. He can just go to a UI which helps him link his own key and detach whatever the key was already there, right? So I think that sort of flow would work really better. uh, Wombat does that, but like they have a claiming fee. We can have an open source product for that as well. I think that will work better, and then it will also have its own revenue to feed its creator. Yeah, for that piece to be solved, it's a like different product. Somebody else to come have to pay. But I have definite ideas on how to build that because like I used to work for an MPC protocol like before this. I have built a MPC protocol which uses secure enclaves and then have multi-party signing where all the key shards are with different parties. I wrote the whole backend infra for it. So I probably know how it can work and then how we can even make it more secure. But I don't want to pick that problem up on Wax because like there are already too many things I'm juggling with. But if anybody wants to do that, I'm open to conversation and then help them. figure out that good flow.
Yeah, that's one of the things I say too when this is brought up to me, because I've had people bring up like ways to make the sign up process easier, and if I want to build some tool that kind of like dances around the current problems and somehow makes it a little easier for the end user, and it's like, it sounds cool and all, I could probably do it, but like at the end of the day, this is not my problem to solve. The fact that this problem exists on the chain in the first place is the bigger problem, and it's like that's up to the team themselves to solve. I think the MetaMask plugin will be a good first step, though. We have to see
Yeah.
what it looks like before we could do anything else with it. Henrik says the main issue on Wax is everyone seems to stack Wax in hope of it to go up. What's more important is getting the biggest shares of the projects who make. Yeah, maybe there are some people on Wax who do, but I would have to say I strongly disagree with that, because I think if everybody was stacking Wax, we'd have not a 2.9% token price right now, and there might be some whales here who don't participate in projects. Maybe that's what you're trying to say, and I would say I could probably agree with that, but I don't think there's enough going on in the chain to get them interested. And I think if there were projects out there with good tokens that were offering enough value, more people would get into them. I don't mean this as any like disrespect to any of the projects that are on Wax, but I don't think there's any tokens on Wax that I feel that comfortable holding in terms of projects. I built WaxDAO and our token has like the most utility. I still wouldn't want to put all my money in it. I mean, it's because the problem at the end of the day is that it's a Wax project and there's no users on Wax. So I know that, I mean, like, how confident can I really be in this project if the chain itself doesn't have any users? What do you think, Mana?
I agree. I agree with Pico also that a lot of people expect that, but I don't think that's the only problem, because like we were talking earlier, right? Like there are not a lot of venues to capture the value in, lock the value in, but there are enough venues for the value to go out, because like in any business, if you have a better opportunity outside, you will just go out to the opportunity, right? So I think we need to have more and more locking mechanisms. We need to stand apart in some sense, right? In 2021, Wax stood apart in terms of the volume of transactions we can do, and then the micro transactions that we can do, right? Right now, we like don't really have that outlier, because Solana has caught up, Ton has caught up, and then Solana can probably do as many transactions as us, right? There are many like theories going around. There are a lot of failed transactions and stuff like that. But like if you just look from bare user perspective, it's pretty smooth, and then you get through a lot of transactions, and then the cost is almost negligible. We need locking mechanisms, and then we need users. I think if we have that, then we solve it. But yeah, I think a lot of people, like theoretically, even I stack up my wax in the hopes for $1. Like, but I don't think that's a majority factor of the reason of the wax that we going on.
Yeah, and also, I mean, there are a lot of project tokens on Wax, like good projects out there that have a token that you might want to support, and I guess that's what you're referring to, Henrik Piga. But putting tokens themselves aside for a second and talking about actual protocols, how many of those are there on Wax? But because that's the way that you capture value, and I don't know many. I mean, if you consider maybe like the dexes to be protocols, WaxFusion, where else is there? Like, what else is there that's an actual protocol that's built to capture capital that people aren't taking advantage of and should be, because it provides a ton of value to them? You can respond to that if you want to. Whenever James wants to know, what up, James? You know, it's funny. James Coons actually is the dude who sent me a Topps MLB NFT in 2020. Got me to sign up to a Wax wallet. He's the first person that told me about Wax, and he's the reason that I joined. He's the reason that WaxDAO and WaxFusion exists, kind of, because I would have never been here if he didn't tell me. But what company would Wax need to bring in to take Wax to the next level? I I'm not saying it can't solve the problem. I just don't think that's the approach. I think no company wants to come here when there's no users to sell things to. If they could somehow bribe a company to come here for a little bit, that company is just going to leave once the money dries up anyway. Like, look at Tops, right? I don't know how they got him here in the first place. I don't know if they paid him or if they just somehow, talked to them and they just happened to like Wax so much. But they came here, they sold a bunch of stuff, and then maybe it dried up a little bit and they left. There's more to it than that. I don't know how much of that information is public, but I don't want to share all the details because I was told in confidence, and I said I wouldn't say anything. But pretty much there was like money involved. They got money elsewhere, or at least they were seeking money elsewhere. I don't know if they
Yeah,
got it, but that's why they left. But yeah, pretty much like when we talk about companies coming here to make the chain more attractive, we know the existing users aren't spending anything on those companies, right? So
yeah,
we're talking about what they're going to bring us new users. Why do they want to do that? That's the question, right? They want to come here and get access to our users, which we don't have.
yeah. There's always a like value exchange in business, right? So either the exchange is one party gives the money and then other party gives something else in return, or you have something else in return and other party brings you the money, right? Like, or it's a barter system where you exchange some other like essential pieces of goods with each other. But like, essentially, a value has to exchange, right? Right now, Wax, I feel, hasn't a lot of lot of value to offer, and then it's also very clear from like all the conversations I heard on live interviews on different that Wax itself as a team is also cash strapped in the sense that they can't go out and spend big dollars. So we know that's a reality. So we have to organically find a way to like bring some value, some sort of tangible value which can go out and sell. It need not be money, but it needs to be something, right? Like which we can exchange with other like people of value.
Yeah, money, users, connections, whatever it is. But when this topic comes up a lot, I think there's a bit of a disconnect because people in the community seem to think that the fact that it's basically free to build stuff here or it can handle a lot of transactions is like some sort of value exchange that benefits these projects. And in my opinion, that's not the case at all. They don't care.
Yeah.
They're not coming here because they want to save money. They're coming here because they want to make money and get
Big
access to
dollars.
money.
Yeah. Right.
If it costs you $100,000 to deploy something on Ethereum, and it costs
But
you
you will take that value out.
exactly,
Like
so
here you're paying $0, but like if you're only taking out, let's say, 1,000, 2,000, $5,000, you as a business, it's still a inferior option than Ethereum, or like even any other like lower end protocol or lower end chain.
and if we're talking about large projects, which is what people are talking about, companies, brands, right? These are not people who have problems getting access to capital to launch their project. They're solely looking at upside. They're
Yeah,
not looking about like how do I cut my costs to deploy on like
yeah,
they're not sitting around having meetings saying our business would be better off if it was on the blockchain. Now, which one is the cheapest?
yeah.
They're
Like,
they're sitting there and they're saying,
yeah,
I heard Bitcoin is $60,000. NFTs, you can make a lot of money. How can we get that money? Oh,
yeah.
I heard that Ethereum or Solana or whatever is like taking off right now. Let's go there. And that's what they're
Yeah.
going to do. They don't care how much it costs to deploy here.
Yeah. So small developers look for downside and big developers or big brands look for upside, right? And then all these chains have like solved for this like other loophole, which is for these small developers, all of these chains have grant programs, right? So they cover their downsides. So like with them getting grants, there is absolutely no downside for them. So all of these small developers also go to the other chains, and then upside we don't anyways have, right? So like we don't essentially have anything we can sell to even small developers or bigger developers. Look at me, right? I am building Alpha World, and I am approaching to Ton team for grants and support, right? And then it was so easy for me to go like, so they have a program called Ton Nest program, where basically all I had to do was pitch them my proposal, and then they have like 70-80% entry ratio. I got into that mentorship system. They are connecting me directly with all the top projects on Telegram and Ton, right? So I'm getting mentorships from them. And then after I'm getting mentorships, they are guiding me on how to run my ad campaigns and everything. after I reach 20,000, 30,000 user milestone, they will help me support with marketing. And then if I pass that level, they will even help me with a grant, right? And then like they have such a beautiful system where I was able to get in, I was able to get like directly talk with some of the successful projects. And it's not like a second hand talk. I'm on a Zoom call with them and I'm talking with them. And then I have an ecosystem of like in the same net program, I have like about 300 other projects, all of them who are super new and all of them who are looking for collabs. So like it's such a beautiful system I have there. And if I am entering my project, as of now I started from Vex, but like I had to change my strategy because I had like about $0 to spend. Like I did a sale to get some funds on Wax. All I could accumulate was maybe $500,000, right, on Wax. And $500,000 isn't enough for like 1 month of marketing. Like even if let's say I code everything myself, right, and don't even pay myself for even coding like the app that I built, I have no like zero funds to bootstrap myself from. So in that case, I will look for support from somebody, right? And then Ton comes in, and then they give me such a beautiful support in all the sense, solving all my problems in a bouquet. Why would I choose Wax over like Ton, right? So like that was a clear indicator for me. Like okay, yeah, there is something off. I have been in the Wax ecosystem for so many years, and then I have never been supported so beautifully like Ton did, like for an unknown stranger on a third day when I just pitched them, a random person pitching them an idea. Uh,
Yeah, I think the way that I view the current state of Wax is that it's basically useful for two types of people. You have the group of guilds who already have their kind of they have their foot in the door already, and they just have a steady income every month, and they're just maintaining and not really interested in doing much to grow. But as far as appealing to new people, maybe somebody couldn't get a grant and they just want to build on the cheapest place possible. Okay, so maybe we're useful for them for a short period of time, but even that person views this as a stepping stone, right? They want to come here, they want to build something for really cheap just to get their seed capital, right? They could sell a couple $1,000s worth of something. As soon as they
yeah,
have that, they're looking at that as the money they need to launch their contract on on another chain, and then they're gone. So, um, yeah, we need to offer more value to people as a chain. Um, Fenris said, "I'm just a random user, but I feel like Wax Team isn't vocal enough in media to draw enough creators and users." I mean, I agree with you a bit on the marketing from the Wax Team maybe not being like the greatest. Then again, it's how much can we really put on them? I mean, they're only like I don't know how many people there are on the team, but I know they're on a limited budget. They have a lot of things to do in terms of like improving the chain, upgrading the
yeah.
infrastructure. Woofy, I don't know how much value add you consider that to have for Wax, but actually, to be honest, Woofy is probably the greatest marketing for Wax they've ever done. I just
Yeah, it's actually like if their intention is to bring eyeballs back to Wax, if they can pull it off like really big on Ton chain, and then like they already have success with Solana, and then if let's say we are at the crux of like a bull market, Woofy can actually be a very successful experiment, right? Like uh, we are here sitting, condemning a different things, but like it's not like the team is not trying. We definitely see them doing a lot of experiments around, but it's just they are also cash tried, right? So we also understand that. But yeah, like the reality is that we don't have users, so we need users to bootstrap. But I would definitely say that Wax team is trying with like really hard. Like I've seen them do a lot of initiatives, even the Woof partner program where they distributed like about 400, $500,000 worth of Wax to different parties. That's like amazing. And most of those partners were on Wax, right? So that's actually very amazing.
yeah, and they pretty much promote anything that you reach out to them and you ask them to promote. They'll publish your stuff on their Twitter if you have a project. They'll publish your Medium article for you and stuff. So they're extremely supportive of people who ask for it. It's just nobody on Wax is really doing anything. I mean, I don't mean to sound insulting. Again, I know there's a lot of small creators out there that build, projects that are interesting and fun and unique and stuff. But in terms of when it comes to actually like marketing to outside users outside of Wax and attracting new capital here, I'd say most of the people in the general crypto space don't care about that stuff. They're looking to make money and that's it. They don't care about anything else. And uh, on the chain, there's really nothing that offers that right now.
Yeah.
Maybe, I mean, now WaxFusion exists, but even that, you're still exposed to wax itself. So it's still tough. Um, I don't know how much you can expect the wax team themselves to do. I know I was down pretty bad about it. Like in my brain, I was feeling down about wax for a while, thinking about what's coming next for me because I don't know how much longer this is going to go on. And then I had met Lucas and well, I met Lucas last year. I don't know if I should say where because I don't know if he wants everybody to know where he's at, but we had some lunch and a drink, and I talked to him for a little bit. It's the first time I ever met him in person, and I will say he inspired a lot of confidence in me because after speaking to him for a little while, I got to know him, and I'm like, okay, this guy's actually not an idiot at all. Like
Yeah.
he's a very intelligent dude, and he's driven to do what's best for the chain. So we don't get much communication in terms of what it is that they're doing all the time, but I know as long as Lucas is here, there's still some hope for me. If I ever find out that he walked away, I'm definitely gonna feel different. To me, that would be like the nail in the coffin. But I can promise you that Lucas is. I don't know what he's doing, but I could say,
Yeah, I've heard a lot of his interviews. Like so, and that is why I see, like I say, like we can't blame them for not trying, right? It's just the situation we are in, and then if you like, we can't go to them and we can't say that hey, have great grant program and then have funding for new projects, pay out because they are not in a situation like that, right? Like they have limited budget they can only spend right now, and that's the reality of it, right? Like the other thing is onboarding. Yes, this is a problem, but this is a problem we also have to support and also have to solve somehow, right? Onboarding. I think there are projects trying to do that, but like if you look at base reality, that's a problem unsolved, which is causing, I think, a reaction. Uh, and I think even those guys are also trying it. The reason I think they haven't opened up uh, like the initial fee for cloud wallet is one, obviously botting, right? But second, I think there is also a RAM problem which was being solved, right? So RAM issue was like RAM issue was actually the issue which led them to have a paywall. And I don't know how many people know it, but you will probably know it. But like the amount of memory or like disk usage we were having in 2021, that was of unheard of at that times, right? And that was a problem other chains couldn't even see, and then our chains are facing them in real time of like while in 2021, right? And apart from then there was a RAM user. That is one reason they had to put a paywall in. But like the chains are still catching up to that level of usage, and then storage consumption, everything. uh, so like they have to solve that problem out. Obviously I think they will eventually open it up, but there's only like a limited stuff we can ask of them. I think projects need to branch out, figure out solutions. Maybe they team up together, but if the intent is to save wax, then we need to solve that piece.
yeah, the RAM issue, by the way, is what I was explaining before about the public key structure and the name structure on the Wax blockchain. So public keys and private keys are generated cryptographically. You don't actually need to store them on a chain in order to know that they exist in the first place. So on a chain like Ethereum or Bitcoin, every account, every public key already exists. Like as soon as the blockchain is created, it's not stored on the chain. It just exists because mathematically it's possible for it to exist. So if you send funds to that key on Ethereum, now there's a record of that account existing because there were some funds sent to it. There's funds tied to that account.
Yeah.
On Wax, that's not the case. On Wax, you need a
You
name,
first-
and in order to send funds to an account in the first place, you have to create this name, which stores, I forget how many bytes it is, but it needs to be stored in the table on the system. And this
yeah.
is also stored on the block producer nodes and stuff, and all API nodes on Wax. So it increases costs for people. It also consumes RAM that's on the chain, which is kind of a fake metric, but it's still a thing. Um, what they're doing now to solve it, that's why the paywall existed, because a bunch of people could sign up to Wax Cloud Wallet, have free wallets created, and just keep filling up that table with more and more and more and more new accounts, taking
Yeah.
up more bytes of RAM on everybody's nodes and on the chain. What they're doing now is basically creating a new account structure called the Slim account, which is not going to have the same permission structure. Right now, when you set up a new account, you have an active and an owner key. This new one's going to be a little bit different and have only. It's not finalized yet, but I think it's going to be only the active key or something by default. It's also not going to by default have contract data. Um, right now on accounts, there's like empty fields for contract stuff in case you add a contract later. This also takes up more RAM. They're slimming all this down to create a new slimmer account, so it's going to lower the problem. But at the end of the day, when you want to sign up for a new account, it's still going to have to go onto the chain, still be stored in the table, still take up some RAM. So they're lessening the effect of the problem, but I honestly don't see how it fully solves it. I don't know if they're going to maybe put a cap on how many free accounts can be created per day or something. But it seems to me that the issue would still exist in some fashion with this. It would just take more accounts to create the problem, I guess, if that makes sense.
Yeah, I think yes. Mm. But was it all like I'm assuming it was not all empty accounts, right? They still had uh, so RAM usage is and anything which writes to any contract, right? So I'm assuming a lot of these accounts would be alien world accounts, would write data to alien worlds, and the real problem was the number of accounts actually writing data, not just like a Wax account, but to all the other accounts, right? Uh, but yeah, but yeah, that's a cost which the user themselves have to pay. So I think that definitely scales up the problem, doesn't solve it fully. We can solve it through a singular contract which creates account on demand but can deposit funds reserved for future, right? Something like that, like which can reserve actions or like tokens for future when the account is created, and then have a single contract of that. It's something how account abstraction does it, right? Like if you look at like latest innovations in ETH, like ERP 4337 EIP, account abstraction. That is how they do it. Like you don't actually need to have an account on chain, so you can basically accumulate all the value within one like singular contract account, and then the moment you attach your keys, and then you can have your own account set up there. But you get a wallet address even before you have a wallet address and everything, right? You just know that this is the wallet address you're going to end up with, and then this is where the funds are going to go, and you don't care about anything else. uh,
I think they actually do have something like that called the temporary account in Wax Cloud Wallet right now, but I don't know
mhm.
fully how it works. I want to
No,
test.
but they can't do a blockchain interaction with that, right?
Yeah, exactly. Yeah.
Yeah, yeah. So that's just like a Google login. So you just have a plain account which you can later connect to any blockchain. Uh, but yeah, like if the apps need a blockchain activity, then they still need to go through that same flow and create account.
So the value of the chain these days is clearly the bridges. Why should projects need to abandon Wax though? They can expand across multiple chains along the way and build up Wax to become the most fun. Yeah. So here's the thing with that. That's theoretically possible. And if you are somebody who has a stake in Wax already and you're trying to expand Wax, it makes sense to branch out to other chains to try and funnel some value back here, maybe. But the people that are already here are not the people that are going to make the chain uh, better and larger. I'm not saying this right, but we need new people to come in. Is my point. Try pitching that concept that you just said to somebody who's not on Wax yet. It's like, hey, instead of launching on this one chain where you can make $1 million, why don't you launch on this chain where there's no money, then go to the one with the $1 million and bring it back to Wax to do us a favor. We're pretty much asking for people to do us charity. Charity is not going to get us anywhere. What we need is the actual incentive to be here in the first place, right? It needs
Yeah.
to be worth it to build on Wax. Like, you shouldn't have to go to another chain in order to capture value and bring it back here.
Yeah.
Some of us will do that because we care about Wax, but you can't expect new people to want to do that. They'll just go and build on the other chain because that's where the money is.
Yeah. And the thing with bridges is it's actually really guarded. I think we dropped a mail to Wax team a while ago, inquiring about how to get a bridge and sorts, and they said that it's pretty much they are not allowing any new other tokens for there, and it's very restricted. So I think that was one of the reasons also NFTV they built their own bridge for Solana, right? So it's bridges are there, but it's very well guarded, and I think only a limited set of tokens will go through. So it's not an opportunity open to all. Like just saying, yeah.
Yeah.
Like NFT
Consumer
collection is
Break.
open, but not the token.
Sorry, I just wanted to say thanks to Consumer Break for sending some people here. But go ahead. Sorry.
Yeah, bridges are only solved for NFT collections. I don't think tokens are there yet. I don't see any tokens moving in and out of Wax as of yet with the current bridge setup.
No, yeah, that's what I was talking about before with like LS Wax. I mean, everybody can build their own bridge if they really want to. I know the Wax team doesn't want to take part in like the official bridge being connected to most tokens because they just
Yeah.
don't want the liability. There's an open source Alien Worlds teleport contract out there that has a Wax or an Antelope and an EVM contract and like an Oracle. So little like you have to sit down and digest it and figure it out, but there's pretty much a public repo that anybody could create their own token bridge with. I want to get LS Wax onto another chain. I've said it a million times, but nice what ifs. But as soon as this effort brings in large fiat volume, it gets the attention of the jurisdiction the servers are in. Without regulation, this becomes a hot target for regulated shut off. Yeah, I mean, they're not going to shut off the entire network. Maybe somebody might get arrested. I do my best to do things in good faith legally, registered business and all that stuff. But at the end of the day, you know what I mean? I'm not gonna not build cool stuff because I think somebody might not like it someday. It is what it is. Hopefully I don't ever get in trouble, but we can't sit here and not innovate because there's some government that's threatening everybody and locking people up for writing code.
Yeah, I mean, most of the startups, almost all the successful startups, they always start in the gray zone, right? They build until they become significant enough, and then when they become significant enough, they find ways to make themselves in the white, right? Like legally, and then what changes are they needed, whether there are like one-time penalties to be paid. I think that's how you do it. It's only worth it even for the regulators to look at a chain when it's successful enough, because it also costs them, right, money. Like investigations and everything costs them money, so it should be worth it, their efforts. So I think we should first reach the level when they have eyeballs on us, and then we should try to figure out, okay, how to fix things we broke in the middle. Obviously, I'm not saying do something shady or dark, but walking the gray is okay for founders.
Yeah, I think I would agree with that. I think if you're small enough, nobody cares, and if you get large enough, you can make adjustments and like Atomic Assets removing the backing feature now and stuff like that because they're concerned about maybe in the future. I just think when you're so small, there's no point in making an example out of you because you don't even exist yet. So a problem for later maybe, but possibly a
Yeah.
problem. What is your opinion on the Ponzonomic scam projects? Like, I mean, I don't know. What do you want me to say? I don't support scams. I think things that generate hype could be good, but if they're meant to be a Ponzi that rips people off, I'm certainly not a fan of it. I think they
Yeah.
are. Are they overall positive or negative? I think there is a positive side and a negative side, but I would have to lean towards negative if it's a scam or just has terrible tokenomics. I think there are so many opportunities to build legitimate DeFi protocols. There are so many things out there that are sustainable that don't exist on Wax right now.
Yeah.
So if somebody was going to create something new, it's not like all the ideas are taken here already. You don't need to create a scam. There's so many things that we can do that will actually add sustainable value to the chain, like permanently, like how with LS Wax with the protocol own liquidity, or any other project that implements protocol own liquidity in their own way, right? when you have something and value goes through it, there should be some way that something is like locked for the chain permanently. It helps everybody. So I don't think we need Ponzi's right now. Is my point, I guess.
Yeah. Uh, my opinion is like there are elements in pharma world which good projects can actually learn from, right? But essentially all these ponzi's, how do they feed us? Like they feed on people's greed, and then they make people like it's a pvp, right? Who gets in and out first, right? He makes the money and then other one loses. So they feed on the greed of the people, and then make the people fight among each other. This is how they reach such a high level of success initially, and then they just take out the money and go out of the system, and then they let people keep fighting. Even today, like it's running because it's still pvp, right? The people like it needs to have a constant stream of new users for the old users to sustain themselves. And like there are a lot of bots just set up for that, and then there is a system set up. I still see in a lot of these shady groups that there are posts by some influencers who pull these new people in, who get into the farmer world. They pull off the profit from them and they just drug themselves, like go out of the system. So I think it's a bad system, but how they designed the tokenomics to work initially, there are really good elements. Like they were the first ones to experiment with a three token model, and how this three token model can really fuel the volume up, right? If used by a good project in a sustainable, non-inflationary way, it's actually a damn good concept a game can have, right? To build its volumes up, because you need to swap one token for the other, and the only way you can do that is you go to the exchange and create a trading volume there, where you end up paying some percent fee, and then increasing or decreasing the withdrawal fee based on supply and demand to control the price impacts on the liquid token. Like there are a lot of great elements those team had. Like it's not like it's not out of a sudden that Farmers World was such a big hit. It was a smart thing for sure. Like it rugged, and like its intentions were bad. That's another thing, but they had such a smart system set up, and I think there are a lot of learnings to be learned.
What the scams get right is that it's obviously not the end result or the intention. That's obviously bad. But the thing
Yeah.
that they do right is they acknowledge this very basic concept that for some reason a lot of people on Wax don't want to acknowledge. People want to make money. If you appeal to that, you have a better chance of your project becoming successful. So that
Yeah.
doesn't mean you rip them off, but you at least acknowledge that people want to make money and you sort of design things with that in mind, you have a much better chance of succeeding. We're not all here for fun, contrary to what people might tell you. They don't like collecting pictures of dogs that much. I mean, it's cool and all, but it's cooler if you make money. Uh, Bridging out to reach new audiences is what everyone has been doing lately with all the tappers on Ton, Taco, and Taiko, etc. It's just a question of whether those also bring users back to Wax now. I don't know if I know enough about any of those games to comment on that, to be honest. I think anything that enables that creates a reason for people to interact with multiple chains, or even just makes people aware that Wax exists, is a good thing. But like stuff like Woofy, for example, I think they have an opportunity to bring people back to Wax
Yeah.
at the end of it. I don't think they've done that yet. Um, I'm not going to write them off and say that that they're not bringing people here. Maybe they have a plan to later. I don't think that's happened yet. Again, like I hate to go back and show my own stuff over and over again, but that's why I want to get LS Wax onto another chain so bad, because, like I said, it doesn't matter what chain that's on. The value is here.
Yeah.
All it can do is help. If we get it out into the wild and people adopt it on other chains, it means more value is here on Wax.
It
So
would be really cool that if at the end of the season, like people have to claim their woof, but they have to claim it in their Wax wallet, right? Like that would be like you would instantly have about 100,000 people coming to Wax at the same instant. That would be amazing. But let's see how that like how does they do it. But if their intent is to onboard users to Wax, that's the perfect opportunity, right? Like when they end of season, when they distribute the rewards, they distribute in the Wax wallet.
Yeah, I mean, if they're giving something away on another chain, that would be like the greatest thing they could do is even to
Yeah,
create like a bounty block contest or something where they have to interact with a couple of Wax dApps, or do a couple of things on Wax, and then you get to claim your tokens, something like that. I don't know.
yeah. Let's see. Uh, oh, another thing about why not both? I think project get lost in me first view instead of yeah, yeah, that is exactly what I am saying, that we need multi-chain projects and multi-chain products. Like I'm just gonna tell you how sustainable ton ecosystem or telegram is, right? So in alpha world I am making about 200 $300 every month just from advertising revenue. That's like more than anything I ever had on Wax, right? Like except the 2021 period, I never made this much sustainable revenue from any product or anywhere, any product, any protocol or myself products on Wax. So
Sorry, I don't want to interrupt you, but are you saying that you're um allowing like Telegram ads for your players, or are you
yeah,
letting?
yeah. So in my like if you go to my Tapo app, people can actually watch ads to earn points. I'm actually making a revenue from there, like 200 to $50 every month, like just from these people watching ads. And then now I have in my Telegram channel, I have stars integrated, so people can actually react with stars. Every star reaction gives me $0.02 each, and then people can just react to support their content creators. They have so many monetization tools built into the Telegram itself that funnels back a lot of revenue to me. And then on top of that, like obviously there are grants, marketing support, everything, which I'm yet to take advantage of, which I'm already in the program of. But like even if Wax projects get into this ecosystem, build out some mini apps, they can just get enough revenue from their existing user base, right? Like you're essentially feeding on ton revenue, right? Like if you have a mini app, all that revenue is like who is advertising? All these tappers who are on ton ecosystem, right? Who is getting the revenue? The Wax project. So you're like tapping the revenue from the ton ecosystem into your project, if even if you have Wax project. So I think even creating a simplistic mini app engaging for your own community, that can help you build a small stream of revenue. And I have like very small user base right now. If the user base scales up, my revenues will also scale up with that.
That's crazy that you have however many thousand users you said you had so far. What was it, like 6,000? You said.
Yeah, 6,000.
That's awesome, man. And how long has that been live?
Look, it has been live for 4 months now. Like, but we had a mini app only 2.5 months back, and most of the users I got in the last month. So before that, I essentially had like 70 80% Wax users and 20 30% others. Today, I'm at a place where I have like 50 60% other users and 40% Wax. And that is also the minute I realized I need to, rethink my onboarding flow a bit and then keep the Wax linkage at the very last step, because there was a lot of drop off when I initially acquired the other users.
Are you advertising somewhere, or how are you acquiring these new users?
One is through mentorship and collabs, right? For example, I got so there is a platform called Adsgram, who I got featured by. So they mentioned me and like my project there, where I got a lot of users from. Then I have these growth hacking, like where like Dejan from my team, he will basically keep my like our Telegram handle in his name, and then he will go to all these influencer groups and talk. People will become curious and then go out and exchange. We'll attend town spaces, like all the spaces related to town, talk about our project there. Like it's all slow grind chunk, but there are also avenues to advertise on Adsgram, and then there is Fragment, right? There are advertising revenues where you can essentially, and this is also another great part, right? So you can advertise on the biggest apps that exist through a very like easy to way, like similar to Google Ads, right? You have a same system as Google Ads there on Telegram already built in, which you can utilize, and then you can add. If I'm a new project on Wax, I have to individually reach out to different teams and then get ads there, and then the cost per ad is even higher. Like for example, even if you look at Atomic Hub, it's damn expensive to get an ad on Atomic Hub. And then like I'm just going to tell you bare numbers, but I paid about 300 wax for 1 hour of my banner, right? There was no CPA, CPM
Atomic
on
Cup?
the telephone. Yeah, yeah. 300 wax, 1 hour, one banner. There is no metrics they provide, like no CPA, CPM, no dollar cost acquisition. They just show my banner. That's it, right? I got two users from it, only two, right? End up spending 200 wax. At that time, it was about $20. I advertised on AdsGram, where I paid about $0.5. My CPM, cost per thousand impressions, was about $0.3. In $0.3, I got 25 clicks. I got 1,000 impressions, and I in $5-6 I was able to get about 500-600 users into my app. So look at how value additive the system is versus ours, right? We don't have good advertising system, and then there is no like CPA, CPM. Everybody basically charges a fixed fee for banners, and then like you get next to none like results on wax advertising.
And you're also advertising to people. It's such a small community, right? I mean, like
Yeah, yeah.
I offer ads on Waxed Out too.
Bounty
People,
block works better than any advertising you can do on wax on any platform. Like you
yeah.
get more conversions from bounty block.
Well, everybody already knows like who you are as well on Wax for the
Yeah,
most part. Like maybe if you're a brand new project, no one knows about you, but if you're doing anything that's like legitimately useful, people have heard about it very fast. So by advertising on anything on Wax, you're pretty much just like telling the people who already know your project exists, that your project exists. So it's like, I don't know, that's crazy. I thought about advertising Wax Fusion on like Nefty and the Taco and stuff like that, and I think they asked maybe like 400 wax per day, which is really not that bad, especially when you consider that. I mean, what is wax 3 cent? What is that, like $12 a day? Compared to advertising elsewhere, it's really nothing. So I can't.
but you don't get a lot of conversions there, like through
Yeah,
advertising.
like I decided not to do it because I was like, I don't know, man. What am I going to spend freaking 10,000 wax to advertise on these places for a week?
Yeah,
To people who probably already know that Wax Fusion exists. I mean, the Wax team posted about it on their Twitter and in Discord, so it's like
yeah.
I'm pretty sure everyone knows about it. We yeah, that's why I like what you're doing. Is what I'm trying to say because we really need to get outside of Wax more. Even stuff like I've listed a bunch of projects on DeFi Llama. I got users through there. I had new people join, like they'll go to the new project section on DeFi Llama and see Wax Fusion or whatever other project up there and click on it and actually like join and use the product. Like I just thought that was so cool because I've never seen. I don't know. It's like it's lonely out here, man. On Wax, like the last time
Yeah,
I've seen a new user come in and be like, "What's Wax blockchain?" It just doesn't happen that often.
yeah.
So, um, Wolf is getting bridged to ton.
Yeah,
So
yeah. I agree. Like it's most likely on Ton. I was just like, saying it would be really great if their intent was to onboard Wax. That's a perfect opportunity. But of course, yeah, like we'll see.
yeah, we don't know what their plans are, so it's hard for me
Yeah.
to criticize or like act like I know what's happening. But I feel like by now I sort of expected to see a little bit more in terms of focus on like actually getting users to Wax. Uh, I don't know. Anything else? I
No.
mean, I could talk for days. I don't care. Well, yeah, I guess we can wrap it up then. You want to leave anything before you go? Any final thoughts or anything I
No. I mean,
forgot to ask
uh,
you?
yeah. Thank you so much for having me. And then, I think we are in a dull phase, so we need to build, and we need to like even if 5-6 people on Wax build something and then solve something, I think we have a chance to get something back on Wax and then have a like revival. I think there's still hope. I'm working for that. and really excited to talk with you, man. And yeah,
Yeah, I appreciate you coming on. I actually kind of want to touch on that real quick, if you if you don't mind. I was just
yeah,
saying this earlier, though, like, you know, people have been kind of saying that they would like to see more from the Wax team and stuff in terms of all the stuff we're talking about, maybe being like more difficult without them having a large bankroll to support these things. And while I agree with that, I think there is a lot of stuff that we could be done that we talked about here. A lot of stuff that could be done that we talked about here
yeah,
without the Wax team's funding. So I think there's still hope for a little while. I think until we get to the point where it looks like guild pay is going to stop happening, like very soon, I'll feel comfortable until then, and I'll keep building. So
yeah.
yeah. All right, man. Thank you for coming on. You're welcome back anytime. And thanks to everybody who watched. I don't know who I have planned for next week, but I'll post about it when I figure it out. See you guys next time.
Yeah.